Okay, tax credits versus tax deductions. What's the difference and which one should you focus the most on? Now, of course, no one really wants to pay more than their fair share of taxes. And understanding the difference between tax deductions and tax credits can give you more confidence that you are not paying more than you need to pay in taxes. So I would guess that you probably know that claiming a tax deduction or a tax credit can help you reduce your overall taxable income, which is especially awesome if you make a lot of money and don't want to pay or owe the IRS. But in this video, I want to explain the differences so that you can spend your time wisely. Stay tuned. Hey everyone, welcome back to the channel. I'm Sean with Life Accounting, the accounting firm that saves businesses from high taxes and low profits. Now, as a tax preparer for many years, finding tax credits and tax deductions for our clients has been one of the most satisfying parts of preparing a tax return, because I can literally help people save hundreds and thousands of dollars on their taxes. So I'm excited to share with you all the ins and outs today around tax deductions and tax credits. All right, so let's start with the basics and then get a little bit more deeper with some examples. So what is a tax credit? A tax credit directly reduces the amount of tax you owe by giving you a dollar for dollar reduction of your tax liability or what you owe the IRS. For example, if you owe $2,000 in taxes and then you get a $2,000 tax credit, then your tax liability becomes zero, aka you won't have to pay anything in taxes. Now let's talk about what is a tax deduction. So a tax deduction reduces the amount of your income that is subject for taxes. So a tax deduction focuses on reducing your taxable income, not your tax liability, aka what you owe the government. Your taxable income is going to be based on how much money you make in the tax bracket that you fall into. So if you are in the 24% tax bracket in 2021 and then you have a $2,000 tax deduction, that saves you $480 in tax liabilities, which is $2,000 times 24%. Now immediately, just based on that example alone, you probably have noticed that tax credits give you much more savings than tax deductions. I mean, you literally have a $2,000 savings versus a $480 savings. But that's not always the case. Let's look at the catch when it comes to tax credits. So some tax credits are non-refundable. So that basically means that if you don't owe a lot of money in taxes, then you may not get the full value of a tax credit. So say for example, you owe the government $500 and then you wind up with a $2,000 tax credit. Well, because you only owe $500, your tax credit basically reduces to $500 and you don't get a refund, hence non-refundable. However, there are some tax credits where you can get a refund. Of course, the popular ones are some of the things you may be aware of, like the earned income tax credit or the child tax credit. These two credits will allow you to wipe out your tax liability and get a refund check from the IRS. However, there are specific requirements from the IRS that you must meet to qualify for non-refundable and refundable tax credits, and a lot of them are based on your income. Now, on the other hand, some deductions like depreciation and other losses can be carried forward and be applied to another tax year, thus giving you a little bit more in savings. Hey Sean, look, I can carry all my expenses on my back. Okay, kind of like that. Now remember, I want you to spend your time focusing on the right things. So here's the big thing. Everyone in the US gets what is called a standard deduction. And I've seen countless amount of times when clients go through all the hassle of going through all their bills, all their paperwork, and all their expenses, only to find out that their expenses do not exceed their standard deduction amount. So really quick, I'm gonna put up on the screen the standard deduction amounts for 2020 tax years and 2021 tax year categorized by the filing status. As you can see, if you are single, then you automatically get a $12,400 standard tax deduction, which means if you don't have more than $12,400 in tax deductions, then you aren't getting any benefit by adding deductions. And the standard deduction gets even higher at $24,800 if you are married. So clearly you will need a lot of qualified deductions in order to make good use of deductions for your personal tax return. So let's bring all this together and look at an example comparing tax credits versus tax deductions. In this example, let's look at which one you would rather have. Would it be a $10,000 tax deduction or a $10,000 tax credit? So let's say you have an adjusted gross income of $100,000. A tax deduction would then decrease your taxable income to $90,000. And at a simple tax rate of 24%, your tax bill will come out to be $21,600, which is $90,000 times 24%. Now, on the other hand, if you only have a tax credit, your taxable income would be $100,000 and you would owe the government $24,000, $100,000 times 24%, but your tax credit would reduce your tax bill by $10,000, so you really only owe $14,000. In this example, of course, the tax credit wins. Now, if you want to see us make a video breaking down all the popular tax credits that you can use for your business and personal tax returns, then make sure you give this video a like. And if this video gets at least 1,000 likes, then we'll follow up with another video breaking down all the tax credits that we possibly can think of. All right, so go ahead and hit the like button and subscribe while you're at it. It really helps support our channel in general. Hey, Sean, look, I can hit the like button all the way from Mars. All right, so the big question now is, which one is better, tax credits or tax deductions? Well, you probably guessed by now, but it depends. If you have a high income and you spend a lot of money on qualified tax items, then tax deductions will help you get significantly more than tax credits, because tax credits are usually given to and more beneficial to low income individuals. Plus, there are not as many tax credits available as there are tax deductions. But of course, you should definitely go for both of them, especially if you meet the qualifications that allow you to get refundable tax credits and surpass the standard deduction amount. Well, I hope this video made sense. If you have questions, as always, put them in the comment section below. We'll do our best to get to as many comments as possible. And plus, we just love seeing your feedback. It gives us momentum and motivation to keep going. And make sure you check out these next two videos coming up that tell you more about tax credits and tax deductions for small businesses. And we'll see you over there.